Hi everybody, Howard Friend, HF Systems here. Haven't posted for the last few days, was on a bit of a trip, but back in the game now. So first up, Eurodollar. So what we've got is the swing from 103.497 topped out at 107.87 a few sessions ago. We since saw a pullback, which I believe is a corrective pullback to 106.273. And a bounce from there. So essentially we're going sideways last couple of days. We're just hovering around this still falling 50-day moving average. So for me, I've still got a bullish tack, still favoring the upside. In terms of upside triggers for the next directional move over the short term, looking for the break above yesterday's high on Eurodollar at 107.641. That for me would suggest we've seen a little minor pullback completed and that we're ready for an attack on the 107.87 swing high, above which we could then see the market extend up to 108.437, 108.836. So a couple of projection targets that come in on the break of yesterday's high. Meantime, it should be fall back through 106.446, and that would obviously put pressure on 106.273, the reaction low so far. And then we're talking about a push into the low 105s in a deeper retracement of this 103.497 advance. Moving on to cable, sterling dollar. Similar kind of picture there in that we saw the 121.551 upswing top out a few sessions back, 126.669. As with Eurodollar, we saw the pullback, good two-day pullback. This time we based at 124.588. And from that point onwards, we're just hovering above this now rising 20-day moving average. So it looks to me like this lateral stuff over the past few days is accumulation after this this pullback, and maybe the buyers are starting to come back in, taking a nibble at this market. So in terms of triggers for short-term bias, looking for the breach of 125.898, yesterday's high. And that would, for me, suggest that we've seen the end of this correction. I think that is the end of the correction at 124.588, but that would add more kind of confidence to the call that that corrective low has been seen. And then we'll be talking about a retest of 126.669, the swing high, and then we've got a projection at 127.103. So an assault on the 50-day moving average is kind of expected. On the downside, should we lose 124.693, that puts pressure on 124.588, the corrective low so far. And then loss there would be talking really about a push into the mid 123s in a deeper retracement of this 121.551 advance. Over to dollar yen. The yen rates of the crosses have decoupled, obviously, last week or two. Yesterday we saw the break of a minor swing high at 130.24, resuming the advance from 126.362. So looks to me like we're just getting ready for this attack on the major swing high at 131.347. So that's really what I'm looking for. If we were to fall back through 130.24, the breakout point from yesterday's move, then that would suggest a little bit of upside failure and time to correct the 126.362 move. But should that happen, some pretty strong support I think would come in. The now rising 20-day moving average I think would pretty much act as some support if we did see the retracement lower. Moving on to gold. So what we've got there is we're essentially back into a trading range. Yesterday we saw an attempt at extending the market through the previous swing high at 1869.73, and it resulted in a kind of a bearish reversal candle, 1874.15. So it's a kind of a marginal swing high and then rejection. So the market's not ready to break through and hold above these levels just yet. So we're in a kind of a neutral environment. I would say right now we're back into the range, in the middle of the range. On the upside, obviously, if we can break above this 1874.15, that would suggest that the bulls really are back in control of this market, and that the 1786.82 advance is resuming, extending. The 50 and the 100-day moving average, they're getting pretty close to intersecting around the 1890 area. So that would be a good upside target should we break higher. On the downside, if we were to fall back through 1844.01, the low from a couple of days ago, that would add further pressure to the downside. Then focus is on the range low, or the reaction low within the uptrend at 1828.42. Below that point, that would turn bearish. That really would turn bearish for a move below 1800 once more. On to crude. Crude oil. So I've been looking for this thing to extend into new highs, which we saw yesterday. Today so far we're seeing a little bit of stalling here. So we had a minor gap up, and then we sold off during the session so far. So it looks like we're struggling at this recent swing high at 1877. 1877. So maybe we see a bit more sideways down action, but big support comes in at 113.97. That really should hold, in my opinion. But the key level for the bears, they would really need to puncture 110.07, this last reaction low within the uptrend, to turn the trend down, and then that would be then we could start to talk about 103 and sub 100 levels. Okay, on to S&P. S&P, we've basically been stuck in this sideways lateral trading range since breaking through this key resistance level at 409.810, forming the major double bottom pattern on the long-term chart. So the overall picture is bullish. Short term, we're kind of neutral, we're chopping, we see a swing down, a swing up, a swing down, like that. In my opinion, I think that a few days back we saw the end of the correction down at 407.440, the bottom of the recent short-term range. I think that's going to be the higher low within the uptrend, and we're going to see an extension of this uptrend. So looking for break of yesterday's high, 419.010, to put pressure on 420.495, the swing high, and then we're looking at a push towards the falling 50 and 100-day moving averages, which come in above the market. Should we fall back through 407.440, that would break the reaction low, negating the idea that we've based already for the next leg up, and then we're back into working lower. We've got an attack on the now rising 20-day moving average, and then we're possibly sub 4,000 levels below that. But that's not favored for the time being. I'm favoring the upside resolution. Finally, onto Bitcoin. Bitcoin lagged a little bit compared to the S&P in terms of kind of risk on, risk off ideas, but today we're seeing quite a good break higher. The previous session we had a bit of a bearish outside session, which made a low at 29.188. This session so far, we've broken through, we've resolved to the upside this bearish outside session. That is a bullish occurrence, in my opinion. And now that suggests that 29.188, the previous low, is a higher low within this now developing uptrend from the swing low, the major swing low at 25.330. So swing correction, and now we're breaking higher in what looks like the next swing higher. So immediate risk is to the upside for an attack on 32.375, above which we're looking at gap resistance during the previous bear market at 34.412, 35.210. On the downside, should we lose 29.188, the previous low, that would suggest upside failure, and then we're threatening 28.001, below which we're looking at a retest of the previous trend low. Okay, that's pretty much it for the time being. Stay tuned. There will be more updates on a daily basis. All the best. Thanks very much.